Hi, I'm John Tangri, and today we're going to be talking about loan modification. It's part of our government's Home Affordable Modification Program to help underwater homeowners. Most of these homeowners would love to get approved. However, based on our research and my conversation with other professionals like bank executives, good foreclosure attorneys, and other short sale professionals, fewer and fewer homeowners are getting approved. About 1 out of 5 will get a permanent loan modification. Between 2010 and 2012, loan modifications have dropped by about 30%. Why is that? Well, I'm going to share with you my knowledge based on my 15 years as a financial planner and the last 6 years as a national short sale pro with hundreds of successful short sales throughout the country. But before we dive into understanding how loan modifications work and what you can do to improve your chances of approval, I have a request. If you like this video, you find it helpful, please share it with as many people as you know who are underwater so together we can help save their homes. Before we start talking about the loan modification process and you start that process, I tell every underwater homeowner that they should put aside 30 to 45 days to get an answer from their lender. I've talked to a lot of frustrated homeowners who waited up to 6 months to hear back from their lender and get an approval or a rejection. Now, please keep in mind these lenders are overwhelmed by the number of applications they get, and their employee turnover rate is pretty high. But in my view, since this is your home on the line and perhaps the greatest financial threat to your family, that you take charge of the loan modification process in a proactive way. I'm going to share with you the step-by-step process you can take to be proactive and take that approach and hopefully get an answer within the 30 to 45 day period from your lender. But before I talk about that step-by-step process, I want to help you understand how the loan modification process works. The way it's designed, the Home Affordable Modification Program, is that homeowners have to meet a very strict set of criteria. The number one thing that you have to meet is that used to be in the past, it had to be your principal residence and you had to be living in that home. Well, that's changed to include investment properties as well. Number two, you have to have a true hardship, not that your interest rate on your mortgage is too high, but you have to have a loss of income, perhaps a death in the family of an income earner, or maybe some major medical issues that have come up that have made it difficult for your finances. So you're going to write a hardship letter to your lender explaining what that hardship is so you can get a loan modification. Number three is going to be your housing debt to income ratio. It has to be between 31% and 40%. Now, this housing debt to income ratio is pretty easy to calculate. On the debt side, all you have to do is you add your monthly principal, your monthly interest, your monthly real estate taxes, your monthly home insurance, and your monthly HOA. You put it all together, you have your debt side. On the income side, all you need is your total monthly gross income before any deductions. So to do the calculation on the ratio of the housing debt to income, all you have to do is take your total debt that you calculated, divide it by your total monthly gross income, and if it's between 31 and 40%, then you passed a major hurdle for getting an approval. Now on your screen we're going to show you a copy of a rejection letter from the lender. The easiest way to view this is by maximizing the video that you're watching so you can clearly read the document. On the very bottom of this letter is the reason for rejection, which is the number one reason given. Zooming into it, you can see that it says the lender couldn't create an affordable payment equal to 31% of the reported gross income without changing the terms of the loan beyond the requirement of the program, and goes on to say, to create an affordable payment for you, the investor owner of your loan would be required to delay collecting too large a portion of your principal balance until the loan pays off beyond what the Home Affordable Modification Program allows. So in other words, the investor of your loan wants their money paid back as quickly as possible, even if it means foreclosing on your home. Now, if you've seen some of our other stop foreclosure videos, then you already know that the bank that you're dealing with is not the ultimate decision maker. In fact, they're usually only servicing that mortgage for an investor. The investor is the one who's going to be the ultimate decision maker, whether it's approval, denial, or a foreclosure, or a short sale. The fourth most important criteria is probably something you've never heard of before. It's called net present value, or NPV. Now, I could share with you and explain to you how it works and how 37 different factors are used to calculate this number, but let's make it simple. The government has actually got a very good website for you to go to where they'll tell you how it works and also help you to calculate it within about 15 to 20 minutes. That's all it's going to take. The website is called https://checkmynpv.com. I'm going to repeat that again. https://checkmynpv.com. Now, why is this important for you? Well, two reasons. First of all, every single investor will use this NPV to decide whether they're going to approve or reject your loan modification. And number two, if you get a rejection, this NPV calculation is what you're going to use to challenge that rejection. Okay, now you know how the loan modification process works, so let's go ahead and move to the steps that you need to take in order to get a quick answer from your lender within that 30 to 45 day time period versus waiting up to 6 months to get an answer on your loan modification application. The first step you're going to take, of course, is you're going to call your lender and you're going to ask them for a loan modification package. The next step is, while you're waiting for that package to come in, go ahead and do those two calculations we talked about earlier, which is the housing debt to income ratio as well as the NPV, the net present value calculation as well. The reason that's important at this point is once you do these two, you'll have a good idea what your chances are of getting a loan modification. Once you get the loan modification package, go ahead and set aside the next weekend to go ahead and fill out all the paperwork and put together all the documents you need. It's only going to take maybe about 2 to 3 hours to get it all together, but it's important that you get the process going since you've already got the package in your hand. Now, the one thing that's going to take you maybe about an hour or so to put together is going to be that important hardship letter that we talked about earlier, where you're going to tell the lender why they need to give you a loan modification. Once that's all put together, then go ahead and send a fax as well as a certified return receipt package to your lender. So two things: fax the package and send them a certified return receipt package as well. Now, the day you do that, mark on your calendar 30 days out and 45 days out. The reason that's important is because you're setting your goals to get an answer between that 30 to 45 day time period. Now, I'm going to give you also other dates that you're going to be follow up, because remember, this is your house on the line, so you want to follow up. Because here's the secret about loan modification representatives. They're only going to look at your file once a week or maybe once every 2 weeks, no more than that. So if you're following up, they'll keep them on your file and get the quick answer that you're looking for. All right, so once you mail it out, on day 4, you're going to call your lender back and you're going to ask them if they have the entire package. And whoever you talk to, get their name, get their contact information. Next is going to be day 7 on your calendar. You're going to call them and find out if they've assigned that package to a loan modification representative. If they have not, ask for a team leader and ask the team leader if they can expedite it and get it assigned to a loan modification representative for you. Day 10, you're going to call again, and this time if it has not been assigned, you're going to ask for a manager and ask the manager to please go ahead and assign you the loan modification representative as quickly as possible, and ask the loan modification representative to call you to confirm that they've been assigned that file. On day 14, you're going to call, and by that time you should already have been contacted by this representative. And if you have, you're going to call them up and you're going to ask them, the very first thing you're going to ask them is, do you have every document you need to process this loan modification application? The number one reason things get delayed and delayed and delayed is because they don't have every single document that you need. So this is your confirmation from the loan modification that you've got, loan modification representative, that you've got everything that they need, and they're going to go ahead and start the process. And if they say yes, they have everything at that particular point, the next question you're going to ask them is, okay, when are you sending my file to the investor for review? I'm going to repeat that again. When are you sending my file to your investor for review? And they'll give you a time period, usually between 7 to 10 days. Now, if they don't have the documents and they tell you these are the things that we need, make sure that you fax them over within 48 hours, no longer than that. If you take any longer than that, it's going to fall off the radar for that representative, and they're going to continue to the next file they're going to go to, because there's hundreds of files that they're dealing with. That's day 14. On day 21, hopefully by day 14 they have everything, but if they don't, then once they get all those documents that they need, 7 days later, day 21, you're going to pick up the phone, you're going to call them and say, hey, you got an approval for me? And of course their answer is going to be most likely, well, I'm still waiting for the investor to come back, or whatever it is. But go in with a very positive attitude, and they'll more likely get the things done quicker for you than the file just sitting there, or nobody calling them at all, or being in an upset mood. So by this time, they should have sent the file over to the investor to review it, and should have gotten a yes or a no. Now, if you don't get an answer by that time, start calling every 3 to 4 days, and you should have an answer by about the 30th, 35th day. Now, if the answer is yes, congratulations, you just qualified for a temporary 3-month trial period on your loan modification. Please make sure you make every single payment on time. And the reason is, during that trial period, if you don't make if you don't make every payment on time, guess what? You're disqualified for a permanent loan modification that could be anywhere from 12 months to 5 years. So very important to make those payments on time, maybe even a couple of days before they're due. Now, if the answer is no, then of course you're going to use that MPV calculation that you did, call up the lender and challenge the rejection. By the way, you only get 30 days to challenge it, otherwise the file is going to be completely closed. And you might have to ask for it again, but that's going to delay your process maybe 6 to 12 months. Now, if you don't get the loan modification, then you should try what's called a mortgage principal reduction. Usually, again, 30 to 45 day time period, you can get an answer. And if you don't get that, then probably the best option for you is going to be a short sale. Now, both the videos on this mortgage principal reduction, as well as how to successfully short sell your home with the very first buyer, are available on our website. So you can check those two out if that's what you need. Now, if you feel a little overwhelmed by this and this process that you're going through with the loan modification, just pick up the phone, call our office. We'll set up a 30-minute free consultation for you and hopefully provide some peace of mind for your family. Now, I do want to point out something to you about the scams out there when it comes to the loan modification. Please do not pay inexperienced attorneys or other people who claim that they can go ahead and get you a loan modification as long as you pay up front, and never pay up front. If they can guarantee you that you'll go ahead and get a significant loan modification, then you can go ahead and pay them after the fact, but never up front. Also, if you decide, well, with all the information you have and the knowledge you have now and the step-by-step process you know how to pursue and follow up on this, I think you can do it yourself. Now, I'm going to go back to the earlier part of our video where I asked you a favor. If you find this helpful and you like it, please share it with as many people as you know who are underwater, so together we can help save their homes. Thank you very much for your time, and I hope you have a successful loan modification and hopefully a permanent one.